Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, May 20th, 2009. The euro-dollar pair climbed today to its highest level since January, testing the area above 1.38 briefly in late New York trading. This week has seen a strong move towards risk appetite as higher stocks with lower stock volatility and signs of thawing credit markets have helped spur purchases of higher yielding assets. That has taken away the allure of the greenback as a safe haven. In the UK, the Bank of England meeting minutes show that policymakers decided unanimously this month to keep rates at 0.5%, while at the same time expanding their quantitative easing program by £50 billion. Some members argued for a larger amount of money to be printed, around £75 billion, so that the bank could provide even more stimulus by buying government bonds and corporate debt. Policymakers also expected inflation to ease significantly below its 2% target if further monetary stimulus is not taken due to slack in the economy. UK manufacturing firms expect the pace of decline in output to slow markedly in the next quarter, suggesting they believe the toughest phase of the recession may be behind them. 17% of firms expect higher volume of output against 34% that anticipate a fall. The resulting balance of negative 17% is the best since last September. However, only 10% of firms reported above normal total order books in May, while 66% said that their orders were below normal. The resulting balance of negative 56 is broadly unchanged from each of the previous 3 months. The pound-dollar pair roared past the 1.55 level in today's trading, climbing more than 300 pips to set a high near 1.5775, which is the highest the pound has been against the dollar since last November. In the New York afternoon, the FOMC meeting minutes also show that policymakers were considering boosting their purchases of assets to spur growth, which pressured the greenback. In Canada, consumer prices fell 0.1% on the month in April, a figure that was lower than expected, and shows that disinflation came from a 1% drop in the shelter price index. On the year, prices rose 0.4% compared to a 1.2% increase in March. The US dollar-Canadian dollar pair slid 200 pips in today's trading, falling below the 1.14 level for the first time since mid-October. The pair broke below its low from last week as oil prices jumped above the $60 a barrel level, and US equity markets were trading in the green for most of the session before sliding into the red right before today's close. The dollar-yen pair, after starting the week higher, slid in today's trading, retesting the area near its low from Monday. The greenback was pressured against all of its key rivals, so higher risk appetite did not translate into gains for the greenback against the yen. Since hitting a high near 96.70 in Tuesday's trading, the pair dropped about 190 pips to today's low. The implication is that the dollar's decline might be reflecting some fundamental weakness in the greenback on US inflation worries and other macro issues, and the pair is decoupling from its usual roles where risk appetite pressures the yen. News from Japan showed that the economy reported another dismal quarter of declining growth during the first quarter. GDP fell an annualized 15.2%, following a downwardly revised 14.4% decline in the fourth quarter. In quarterly terms, GDP fell 4%. Surprisingly, both headline figures were still better than forecast. The hope is that with central banks acting aggressively around the world, cutting interest rates to low levels, and pumping money into their economies, that the worst of the global recession is over and that growth could return to Japan in the second or third quarter. Tonight, Japan will post data on its services sector, while overnight the Eurozone and Germany released their flash versions of manufacturing and services PMIs. The UK, meanwhile, posts data on retail sales, business investment, and money supply. Tomorrow, the US will release data on weekly jobless claims, its Philly Fed manufacturing index, and the Conference Board leading index. And that concludes today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.